welcome to At the Forefront Fintech Conversations. I'm Sam Belden, head of content at Forefront Communications, and today I am joined by Melissa Watras and Ann Cendejas. Melissa is the director of product at Trillium Surveyor, a powerful provider of powerful and intuitive trade surveillance and best execution analytics software. And Ann is chief compliance officer at Tickrs Clearing, which is a technologically driven financial services company offering trade execution, custody, and clearing services. Welcome to At the Forefront, both of you.
Thank you. Happy to be here.
Great. Happy to have you both on. So we've got a great conversation planned today. Just to give our audience a little bit of context, surveillance and best execution analytics have often operated in separate workflows over the years, but as markets become more complex, many firms are evaluating what it looks like to bring these oversight functions closer together: trade surveillance, best execution analytics. So today we're going to talk a little bit about that shift, what is driving it, and how firms are preparing for this next stage of oversight across both verticals. So let's start with sort of what's driving this conversation today. Melissa, maybe you can give us a little overview of how trading conditions have changed over the recent years.
Yeah, thanks, Sam. Happy to. I think that the market has certainly changed a lot in a short amount of time. So trading is happening across more venues with longer hours. And so that picture has certainly gotten more complex. And, when we're seeing liquidity also being fragmented, it means that context matters even more than it used to. And this concept of context will come up, I think, quite a bit in our conversation. But regulators and internal governance teams are asking for more than just alerts. They expect firms to explain, how did they reach their decisions? And the reality is that a lot of oversight workflows and frameworks were built for a market that no longer exists. So a market that's more centralized and slower. And so these frameworks and workflows are really being stretched. And so we're really seeing now that firms are moving towards that clearer shared context across the teams and tightening oversight, on their side, because it gives a more accurate and consistent view of what's happening and where their risks really.
Great. And curious to get your perspective here. What expectations are increasing for compliance and supervision teams like yours?
So I think compliance and supervision teams are really kind of constantly facing rising expectations because it's being driven by new rules as well as exam and enforcement priorities. We really have to ensure we not only have the operational and system capacities, but sufficient personnel in place that have the correct training so that we can meet these new priorities. As an example, this past year, the FINRA's annual regulatory oversight report, we really saw an emphasis on topics like AML compliance, fraud detection, account intrusion, manipulative trading, and market surveillance. We want to make sure that we have a robust program and tools, as well as good policies and procedures, so that we can perform that ongoing monitoring of suspicious and potentially manipulative trading activity. A top priority for us this year has really been to expand our post-trade surveillance and procedures, improve our risk controls, do training with our team, and ensure that we really do have a clearly defined and understood escalation process for potentially suspicious activity.
Great. Thank you. And just curious about are there any specific triggers that are really driving firms to revisit their oversight workflows right now? Curious to get your perspective on that, any sort of immediate drivers here.
Yeah, I think it's a good question. And Sam, what I would say is that there's no one specific regulatory or operational trigger, but a combination. I think again, the broader reality is that, the market has just outgrown many of the processes that we built years ago. And so we know that reviews need to be faster and more consistent and more defendable. And so that requires that clearer shared context across teams. So I think that the shift that we're seeing now is that firms are really taking a step back to, take a fresh look at how does my oversight program actually work? Where are my true risks? And are there technology offerings out there that can help us close our gaps or remove any friction?
I agree with Melissa. also it's because we are seeing that emphasis, like I said, on topics like manipulative trading. We're hearing and reading about other firms that are receiving fines for not having proper controls in place. So we really want to ensure that we've mitigated as much risk as possible and that we have the right controls in place for oversight and supervision. We all know humans are prone to make mistakes. And so using tools like surveillance systems as well as multiple personnel to review the same data can really make a big difference.
Great. Perfect. That's a lot of great context, I think, for our audience. And so I mentioned at the beginning of the episode that surveillance and best execution analytics have traditionally operated in separate systems, separate workflows. And I know that based on the trends that we're talking about, many firms are now reevaluating how oversight and analytics are supported across their technology stack. In many cases, instead of keeping these functions distinct, starting to think more strategically about the trade life cycle and where closer alignment between surveillance, best execution could enhance clarity, efficiency, create other benefits for the business. So there's a lot there, and maybe we can start to peel that back a little bit. Can you both sort of give us your perspective on the history of how surveillance and best execution analytics have been handled within firms, and we can go from there.
Yeah, I think the approach in the past probably has been a little bit more passive. Firms might have put this kind of blind trust or heavily relied on third party vendors or counterparties to ensure that surveillance or best execution was being done on their behalf and working as intended. So no need to, further investigate. But I think it's really important that our process and approach evolves into a more proactive approach. So firms should be using tools and resources to enhance their current processes to review their own best execution, for example.
Yeah, and that's really well put. And just building on that and borrowing your term of passive, I think that passive approach also shows up in how firms are structuring their tools. So we still see many firms, they keep their surveillance and best X analytics tools in separate systems, and they have that kind of narrow view. So teams generally stay within their own tools and kind of swim in their own lane until there's a specific reason. So whether that's like a regulatory inquiry or an internal, question, but that works to some extent, but equally like the full context is never naturally in one place. So that effort to build out the full picture really only happens when there's a reason, and it's much more reactionary versus proactive.
That's great. And Melissa, sticking with you for a minute, I know that one thing that Surveyor has worked on over the past couple of years is bringing trade surveillance and best execution analytics together in one platform. Can you tell us a little bit about what drove that decision from your end, and what sort of the thinking was there?
Yeah, absolutely. I think, Sam, the decision really came down to data and the impact that we can have using that data. So once we really understood what the pain points were from our user groups, and we looked at how much shared context there is between surveillance and best execution, it was fairly like natural for us to bring those two, oversight processes onto one platform. So building out that consistent source of truth. And by doing so, it removes a lot of the friction that firms face today. So teams can still operate independently, of course, but when they need that full assessment, the context is already aligned. And the oversight becomes that much more clearer and consistent. And that building of that full picture needs to happen more often in line with regulatory expectation and risk management.
Great. Yeah. Can you give me a few examples of what becomes more difficult or slower when information is spread across different systems, different teams, when you're sort of taking that non-integrated approach?
Yeah, I'm sure Ann and I probably have a few battle wounds that we can speak to. But and the reason that I say this is, I myself am a former trade surveillance analyst, and so firsthand can confirm that when information is spread across various systems, that initial step of gathering data just takes that much longer. And it's funny because surveillance and best execution, yes, it's different parts, but it's the same workflow. However, timing and routing and venue data, it rarely sits together. So you're spending resources and talent and time with teams trying to piece together the story before they can actually ever do true analysis. And so again, the work gets done, but the data fragmentation just adds that level of complexity that's really unnecessary and quite honestly, like a little bit of grunt work. And so once you have that from, the early stages of, trying to identify the information, it just trickles down into the review process and adds more layers, which, and I'm sure you've seen on your side as well.
Yeah. Yeah, the addition of, systems and processes might initially lead to a slower overall process because it's just more data to look at during the day. And then in turn, it's researching and reviewing that data. And then once you review the data, then that could lead to reviewing previous day's data to identify was there a pattern. As a result, items, might be discovered for discussion, for escalation, and further review. But I think a slower process is really a positive thing because the outcome can lead to insightful discussions, new ideas, process improvements, or procedure enhancements.
Great. And then, Anne, sticking with you, can you talk through a little bit some of the appeal and some of the benefits that you've seen from consolidating these two functions into a shared environment?
Yeah, it was something that was, very appealing to us as a firm to have these functions consolidated. And we chose this option because we already had a good partnership with our current surveillance system and Melissa's team at Trillium. So it really made sense for us to be able to look at best execution in that same unified system environment. The unified approach makes collaboration very simple. Not only we were already familiar with the look and feel of the product, but as a smaller firm, we might have some of the same personnel reviewing the data in different ways. Lastly, it was also really helpful for us to be able to send our data files one time, but have it used across multiple systems for multiple purposes.
Yeah, and just to add to that too. So we have this firm that we use at Surveyor, which is Simplicated, and I think that that fits well here because ultimately what we're doing is we're taking execution and trade data and we're distilling it in a way that's digestible and shareable across functions. So when these functions live in the same environment, teams are working from the same data, and therefore reviews just feel that much more streamlined. So you're actually spending less time managing systems and more time interpreting what the data is trying to tell.
Perfect. That's great. So obviously, this idea of unifying surveillance and execution analytics is driving a lot of value today, and I'm curious to get your perspectives on how it might continue to drive value in the future. So I'm not breaking any new ground when I say, oversight expectations, trading conditions, the nature of markets will continue to evolve and become more complex, and I'm curious about how unifying these two functions might create some benefits as market participants navigate change and evolve their businesses to meet the moment. So, and I guess we could start with your perspective here. When you think about take the next 1 to 3 years and how oversight and workflows might need to evolve to align with industry trends. What comes to mind for you?
Well, focus and expectations, I don't think are likely to shift away from, enhanced monitoring and surveillance. So firms and in particular clearing firms should really be prepared to continuously evolve oversight and workflow. There's always going to be new and different attempts and schemes related to market manipulation, fraud, account intrusion, but the fundamentals are really going to remain the same. That we need to continue to monitor and focus on these items as well as new ones that surface. It'll be just as important as ever to remain vigilant and have the right people, processes, and systems in place.
Yeah, makes sense. And then Melissa, I'm curious to get your perspective on, what do you see as like the emerging factors, whether it's in market structure, in data, on the regulatory side. What do you think is going to have the biggest impact in terms of how firms are going to approach oversight over the next few years?
Yeah, it's a great question. And some of what we touched on earlier, we see market structure moving rapidly and moving towards longer hours and supporting a broader mix of products. And that's naturally going to raise the volume and variability of the activity that teams need to review. So marry that with the expectations around transparency rising from regulators, firms are going to need to be able to explain decisions quickly and confidently. So it's not just that checking the box exercise, it's really explaining why did you make the decisions that you did. And so again, it comes back to that consistent underlying data that's just so essential for gaining that clarity. And when firms can bring together trading and compliance and operations around that same data set and that same information, they'll be able to adapt faster and make decisions with more certainty. So I think in the next, few years, we're going to see that move towards more collaborative, data-driven oversight.
Great. Makes sense. And then just as we continue to move down the road here, as these two functions continue to become more integrated with one another, I'm curious what you both see as the greatest opportunity for clearing and trading teams to work together more effectively, and work together to drive more value on both sides. Anne, any thoughts on that?
Yeah, I really think the most important factor, in my opinion, is to stay collaborative and work together. Teams are going to need to stay informed on new regulations and policies. So the way we work together is going to continue to evolve, but those same fundamentals of having the knowledge base of new rules is going to be really important. Team members are going to need to stay open and flexible because the approach might change and procedures that they used to have might evolve into new procedures as those old processes and procedures become outdated.
Yeah, and that's really well put and completely agreed. As oversight becomes more integrated, there's real opportunity for clearing and trading teams to what I'll like say co-interpret the same information. So with the clearing side, you have that broad, end-to-end view, and then trading can bring in that additional market context. And so when those perspectives, come together, firms can more easily detect, potential risk and spot those patterns earlier, understand decision making, and make adjustments where they need to with more confidence. So we're shifting the collaboration from simply data sharing to actually aligning on what does this data mean? And that's going to be beneficial for all parties.
Yeah, fantastic. As a non-practitioner, you guys have given me a great overview of how sort of more collaboration, more context in a very scalable and responsible way can drive benefits for across the board for firms that are sitting in the space where surveillance and execution analytics are both crucial. So I really appreciate your time and insights today. For anyone who's interested in exploring the topic further, Trillium Surveyor has published an article on this theme with the title The New Trading Edge, Unified Trade Surveillance and Best Execution Analytics, dives a bit deeper into a lot of the themes that we discussed today. So that's available now on trilliumsurveyor.com for anyone who is interested in learning more. And for more episodes like this one, you can go over to forefrontcomms.com, over to the news and insights section, and check out a full archive of At the Forefront episodes. So once again, this has been At the Forefront. Melissa, and really appreciate the time you took today and for sharing with our viewers.
Yep. Thank you
Thank,
for having us.
Take
yeah,
care.
thanks, guys.